Thanks for joining us for the Executive Series. Today I'm talking to Richard Saville, who is the Managing Director and CEO of Orocobre. Thanks for your time, Richard.
Good to meet you, Tom.
Now, let's get our hands around exactly what it is that you're doing at the moment, because it's really quite a hot topic as far as market interest is concerned.
Yeah, indeed it is. Orocobre is a company that kicked off back in December 2007, and since then we've been building this project in northern Argentina. It's a lithium project, and we're nearing the final stages of ramp up of our production. So back in the first quarter we did 2,332 tonnes. This quarter we're going to do 3,000 tonnes, and we should be at nameplate capacity in September.
Now, lithium has become a hot topic. Why exactly is lithium so important at the moment?
Well, that's linked into the EV revolution and the role of batteries in power packs on the wall, renewables. It's very topical. When you look at the pollution issues in China and India and the electrification of transport, that's what's driving demand.
Now, when you compare that to other sources that get used in batteries, such as graphite, for example, how do you stack up?
Well, graphite is the other part of the battery. So graphite's the anode, we're on the cathode side. So we go hand in hand. Our technology, lithium-ion battery technology, is replacing the old nickel metal hydride technology, the nickel cadmium batteries. You might remember those with your big heavy brick phones. The lithium-ion batteries started to take off and become those lightweight batteries that make all our portable electronics and electrical equipment the weight it is. So that's the new technology.
So Richard, over the course of this year or the last 12 months, really, we've seen extraordinary volatility in commodity prices. Within that environment, how have lithium prices been stacking up?
Well, historically, lithium hasn't performed like your average commodity. It's not an LME-traded metal. It doesn't have derivatives trading, therefore, and it traditionally had stable pricing. Back in the global financial crisis period, it would have fallen to about $4,500 a tonne. We did our feasibility study assuming $5,500 a tonne, and right now we're looking forward at pricing this quarter on an FOB basis, so what we receive, $7,500 a tonne plus, next quarter $10,000 a tonne or more than that. So we're in a very firm pricing environment, and that's reflecting a tightness of supply. And you'll have heard about the sort of spot prices that can be achieved on small volumes in China. That's an indication of that tightness of supply. So, firm pricing environment.
Okay, and in terms of who your major customers are, where are you selling into?
We're selling into the United States, Europe, and all of the Asian countries. China's an important part of our sales, but also Korea, Japan. So all of those places that make batteries are our customers, and the traditional industrial markets in the United States and Europe. So we've got about 30 customers at the moment, and I'd imagine it's continuing with that kind of customer base.
Okay, so in terms of the ramp-up phase that you're talking about, you're coming to the end of that.
Yes.
What do you envisage happening as far as the next 6 to 9 months are concerned? Okay,
well, our first objective is to get to that full production rate, and that's September. And then at the same time, we're just kicking off with a separate team the expansion studies there to look at doubling capacity in, say, 2 to 3 years' time. So that's a key objective running on the side. So those are our two main objectives. We have another asset class, it's Borax Argentina. So these assets have been sitting there kind of unloved while we've been focusing at Olaroz, at the lithium project, and we can get some light being shed onto those assets now and start to grow those businesses.
Okay, is that going to require additional capex?
It's modest. Borax Argentina, the kind of capital intensity of those processing routes is very small. So a bit unlike the lithium side, so lithium is more capital intensive. So no, it will require more capex, but not in a material sense.
Yeah. Excellent. All right. Great insights today, Richard. Thanks for your time.
Yeah, that's great.
And thanks for joining us for the Executive Series.